Hey all, welcome back to another episode of Mindful Finance. Today we are going to check in detail about, or this is the first episode of the series which is about price actions. I thought of like helping or guiding you with respect to price actions because this is the very important. This is the core for whatever you are going to do in a stock market, right? If you are going to look into the chart, price action is important. Without price actions, we cannot do anything. So you have to understand the price action. That is very important. Second thing is, I'm not going to, in this video, I'm not going to touch upon the basics of what is candle, what is wick and other things. Hope I feel like you already knows that, and I also covered this in past video also. So let's get detail into price action. This is Sundar and you are watching Mindful Finance. So in this episode, we are going to touch upon very simple one because this is the basic. After this, you have to try this out and post it in the comment. And if you like it, please give a simple thanks. That will be helpful to create this kind of a video further. So going forward, the price actions may get more complicated. So this is the basic one I'm going to try. You have to share the feedback. Okay, let's jump into that one. First of all, for the price actions, thing you need to have a very clear understanding is support and resistance. I hope you are aware of support and resistance. If not, support is the area where more buying happen, where buyers are dominating. Like for example, you might be like interested in buying, say, an iPhone, and you feel that the iPhone, if the price is currently on the market price is say 90,000, and if you feel that the price for iPhone is 70,000, and whenever the price goes to 70,000, people will jump into buying that product. Right, so that is called the support area where demand is more. And in case the iPhone price goes to 1 lakh, but I bought it for 70,000 now, right? So now that is the area we call it as a resistance, which means people may tend to buy that and sell that at a price because they feel that it is a good price to sell. Okay, so everybody jump and sell that one. So where that is the called supply zone, whereas demand is reduced, only more supply is there, right? So that is where the whole concept is demand and supply. More demand, more supply. If demand is there, people tend to buy. That means more demand is there, people tend to buy. More supply, people tend to sell. The selling zone can be high or low. We don't know about that one because the price goes down also, people start to sell. They get panic and they will start to sell. That is where when the demand zone is broken, which means 70,000 I'm feeling as a comfortable price, but a lot of people are holding a product at 70,000 rupees, but everybody start to sell for 69,000 rupees. 69,000 rupees. In that case, what will happen is you will get panic because it is going down. So you bought for 70,000. Now it went to 69,000. So you will tend to sell for 1,000 rupees loss. What will happen? So you sell at 69,000. The other person who bought at 69,000, he also feel that, okay, the price is going down. So I also want to sell, and he'll sell further. So likewise, the selling goes like a staggering phase. People who are bought at the price will start to get out of that price. And that is where the demand zone breaks down, the price falls. Similarly, the buying zone or resistance zone. The price goes to the high and people tend to buy more. People may feel that, okay, the price of the product may go further. Instead of 90,000, it may go further to 1 lakh. So still people tend to buy, okay, I feel 90,000 is a good price for me. And more people buy at 90,000. So from 1 lakh, it may go to 1 lakh 20,000. So that is the price where it is breaking up. It's going beyond my current price. So this is the scenario you need to understand the basics. Let's jump into the chart and I'll explain you the demand and supply zone. So this is trading view. So here first go to the bigger time frame. Let's say 1 month time frame. Okay, this is my 1 month time frame. If you see how the Nifty is in a high, in a first look itself, you can understand that it is going in as a slope, right? This slope. Normally what happens, 45 degree of any kind of a trend is a good trend. Okay, if it is more than 45 trend, it is going very fast and aggressive, and there is a chance that it may fall. Okay, that is how we are. So this is the median trend, 45-degree. Okay, and beyond that, if it goes, see, it's slightly going up, but it comes and touches this one. It's going up and touches this one. It's going up and touches. So this zone is called your support zone. Okay, this is called support zone. But before going to the angle line, let's go and check the in the normal trend. I'll delete this one for now. I don't want to confuse now. So now you have to see where are the places the price went and it fell. Right here, if you see, so here you can draw a horizontal line. Okay, take a horizontal line and point out. See, these are the areas where it hit the high and fell. Right. So this area, if you see, this is the high. It broke and went fell down. Here also it went up, and so this is the one area it felt very high resistance. Whenever it hit that place, it went down. Right. At one point of time, see, it broke here, but still it didn't continue, and it fell again. And here is the place where it given a breakout. Okay, and then it is going up. So this is called resistance zone. And similarly, where it is taking the support. So this area, whenever it hits this area, okay, this I'm targeting this one. Okay, so whenever it touches this area, it is going up. Right. So that is how you have to take this area or this area. You can take anyone. Okay. So this is my support zone here. Okay. So whenever it touches, it is going up. So this is my demand. This is my supply. Okay. And whenever it touches, it is going up. So here in this area, people tend to buy more. In this area, the price comes here, people are selling. That is the whole concept. Okay. So you need to know this support and resistance zone. Similarly, if you see the current Nifty where it is seeing, so this is your resistance zone, and this is whenever it hits this area, it is taking a support. So this is my support zone. So it is between this demand and supply zone. So this is my big demand. So whenever price hits this place, people tend to buy. And till now it has not reached, but earlier it reached and it fell. But beyond that, you can take this zone also, right? So every time when it touches this one, it is falling. So this is another, the closed current level of resistance. Whenever it hits this, the price is falling. You can go and you can mark this way also, right? So whenever it touches, it is falling. So this is your resistance. So this is how you have to draw support and resistance. Similarly, you can draw trend lines in the angle. It has to touch at least 2 points. I'm drawing from here to here. At least it has to touch 2 lines. So this is my angle trend line. Or you can draw from here. If you want to draw, you can draw here. You can draw like this. You can draw the end of the wick, or you can draw at the close also, touching all the close. But drawing at the wick is better one. Okay. So this is our angle trend line. Now what you can do is you can clone this one. Right click and take a clone and keep it here. Just I have drawn from here to here, right? So in that case, this used to be my resistance. If you clone this one, it is a resistance. So it is given a breakout. So it has broken out this area. So you can push this one to next zone. So likewise, your resistance moves here. So now actually the resistance is here, right? In this zone. So the market may go up and may hit this area. So that is our expectation now. So this is the highest resistance. So in the angle line, this is the resistance. In the normal horizontal way, these are the resistance. So you have to mark angle and the normal support and resistance. So this is the basics now. So we are now clear. Now we have to find out the price actions, which I am going to tell the pattern, right? So there are different types of candle you can watch out. Okay. When the market is in the uptrend, you have to watch the highs, higher high. When the market is making higher highs, then you have to keep a track on the higher highs. Let me show you. I'll hide all these things. Let's show higher highs. So this is the high. This was the earlier high. Then there was another high. Okay. This was the high and another high here it formed, right? And you can see a candle over here, which is a bearish candle. And again, there is a doji candle. And again, another doji candle, dragonfly. Another, you are seeing a bullish candle, right? So now if you clearly see, these candles are confusing. There is no consistent or bullish kind of a thing, right? It is making higher high, higher high. Here if you see, it is making lower low also. The candle is making lower low also. Higher highs and lower low. So this pattern is called like an expanded triangle pattern. Okay, I'll tell you this thing later point of time, but this is what happening, right? So now what happens if you see, it is trying to touch this trend line here. So if you see, so it is touching this one. So there is it made a higher high, but it is going downwards. It is making lower lows. But here, this was the low, right? It couldn't break this low. So here it has taken a support. Now it has made another high. So to check this thing, this price action, right? The candle you see, this kind of confusion hand candle comes means you have to be very careful. You need to find a bullish candle, then only it can give a momentum. Now let's go to the next higher high. When this made this higher high, see, this one is my resistance now, right? Whenever it touches this one, it is falling down. So you can see hammer at the top is not a good sign for the bullish side. So this is a hammer candle, okay? Because the people are buying, but sellers are dominating here, and they keep pushing the market downwards. Similarly, you see it's not consistent. Like these all are giving a bearish signal. There is no bullish signal here, so it couldn't be able to consolidate. It's falling down. Similarly, if you see every high, right? Every time whenever it make a higher high, and that will become your resistance, and at the resistance you need to watch how it is behaving. It is making a bearish candle, or it is giving a breakout candle, whatever it is. Now you see here there's a breakout candle, a good breakout candle, right? Now you will feel that, okay, this looks like a good candle. Now I can enter. But that's where the problem comes. Now if you see the next candles, it's not giving a good sign for you to continue. It fell down. So now what happens is you can enter here, but you need to clearly have a stop loss for this one. Like this is my stop loss. Okay, this is a good, but you need to have another one candle to break this candle. Now when you see this particular candle, next candle, it is not a bullish candle. Means it is not closed above this one. It has closed below this one. So this is not a good sign for a bullish. So still there is no conviction for me to continue in this one. So I'll hold. Now you see it fell. There was a big red candle here, and there is a bullish sign. If you see, this is a good piercing candle, engulfing and piercing candle. This one, right? The green one. This was a big red, but see, immediately it got recovered. So now it is giving good momentum. Now you can enter here. This is a good sign for you to enter. Where you to enter? You have to enter. So you have to enter above this one, and my stop loss is below this candle. Okay. From here, if you are trader, you can say 1:2 ratio, or 1:2, I can say 1:2 ratio, right? So I can trade as a trader, but I am a long-term investor. What I will do based on my pattern, I will enter here more, right? I'll add more to here. That is what I will be doing. Or what I will do, every support I will be adding more, right? There are two ways you can invest. All the support you can invest, and you can just wait for it. Breakout may happen at any point of time, but if you know the support zone, you can enter. And again, instead of every support you are entering, you can see the candle at the support level. What kind of price action happening at the support. If it is a bullish candle, right, it will go up. So I will add more here. This is a hammer candle here. This is also a good sign. I will enter here, right? Whenever a dip happens, I'll see two things. One is if you haven't seen my previous video, go back and check that. If I see a divergence, I'll enter more. If I see a good price action, I'll enter more. These are my logics. So this is the basics. If you don't understand, please put it in the comment. Maybe in the next video I'll try to explain. But this is what the support and resistance thing works, and the price action works. There are multiple type of candles are there to find out the reversal signs, right? The bottom, if you see a hammer or doji, it's a bullish sign, it's a reversal sign, right? These are very good candle. The support, I'm finding this kind of a thing. Or in the downtrend, I'm finding, let's show some kind of downtrend for you. You see this one. This was going down, and you can see a hammer. So market went up. If you're a trader, you can catch this one, right? But as an investor, I will add more here, right? Okay, it fell down now. All I see bearish candle. Now I see a good bullish here. This is piercing. This is almost like a engulfing. This is an engulfing or hammer. Okay. If I merge the two candle, I'll find a good hammer here. So this is a very good bullish sign. So I'll enter here more. and also I will be looking for divergence. If any divergence, I will enter more, right? That is our logic. Every price action I can enter or I will find a divergence. So here, even though there is no divergence, right? There is no divergence, but still the pattern looks good for me. The price action goods looks good for me. But even like if you see this one, so price action looks good for me, so I'll enter here. Similarly, now let's see what is happening at the market. I told you, right? It is making higher high, but in the higher highs, the candles are not making a bullish sign here. So that is why it cannot control consistently, like it cannot hold this price. So you can see everything's a weak candle. We count out how many bearish candles here. 1, 2, 3, 4, 5, 6, 7, 8. 8 red candles are there in total compared to 1, 2, 3, 4, 5, 6 green candle. Right. So that clearly shows bearishness is more. So what will happen? It will fall. And it is again in the resistance zone. Right. Every time it hits this area, it is falling. You can mark the resistance here. Every time it is getting hit at this place and falling. Similarly, if I draw a resistance line here, right, this one, this is the resistance line for me, right? It has given a breakout here. So now this resistance may act as a support. This will act as a support. But if it breaks, next support you have to find out. Where is the next support? This is the next support. It may come down to till here. This is how you have to find support and resistance. You have to draw multiple support and resistance to find out the levels. Okay, you got it right. So yeah, so this is what I just wanted to tell you guys. For this episode, you got an idea about support and resistance. There are multiple candles are there. For that, a simple thing I'll help you. Go to indicators, okay, and type pattern here. Okay, you will find all candlestick patterns. You click on it, it will automatically highlight you the candle types here. You see, so right now here it is showing. It will give an explanation also. This is engulfing at the end of the. So you can read out. So here doji candle, right? It you don't need to worry about yourself. It gives you the patterns here. And if you go to the settings, click on the settings, you find different types of patterns here, right? These are the major one. You can find a lot of patterns are there, candlestick patterns are there. If you go and check all these things, you'll get confused. So follow one simple strategy or whichever candlestick you feel comfortable, use that and follow that one. That is well and good enough for you. Don't get confused at all. Okay. Hope you got the idea, and this will help you a lot to find out where is the bearishness, where is the bullishness. And the trend line, the retracement, everything I have given clarity before for you guys. Right now, this is just to revise your understanding of candlestick and understanding the support and resistance. If you have any idea, if you have any question, please post in the comment section. And if you like it, just give me a thumbs up. Hope you like it. So hope you like this video. If you have any question, please comment on that. Okay, that is very important for me. I'll only if you comment or anything, then only I can understand you guys are trying to understand. Or if you're not, based on that, I can put a what is it? I can make the next video. Otherwise, it's monotonous. I'm just posting video and there is no conversation. It will be boring for me as well as. Okay, so hope you like it. If you like it, give a thumbs up, subscribe it, and press the notification icon to get my video on time. Thank you.